Let's bring in Patrick Palfrey, senior equity strategist at Credit Suisse. Those are some fairly pessimistic words coming from the former bond king. Is that an environment that you think is going to develop in 2020? Are we going to be doomed for mediocrity in the stock and bond markets?
Well, we don't think we're going to be doomed. What's interesting is, we see the data somewhat similar to how he sees it. We believe the fiscal stimulus was really the catalyst for the economic growth that we saw in 2018, and the reason we're seeing the deceleration now in economic trends. But what's interesting is the industrial data is in the process of bottoming. That's really where you want to focus. The bounce in ISM manufacturing and industrial production is going to propel stocks higher in 2020, and that will be the driver of market success.
What do you say to those people who proffer that the industrial cycle is not bottoming out, that we do see still these ISM and PMI numbers coming from all over the world that still are languishing at levels below 50, that are going to hold there for a while, and that the interest rate environment is bearing that out? We have seen a tick lowered gradually over the course of the past few weeks in the 10-year note yield as well, signaling maybe people aren't worried as much about growth or inflation down the line.
So when we look at economists' estimates, what they see is the industrial production bottoming late 4Q, 1Q 2020. So we are in the process of witnessing that now. Many of the readings are pointing to stabilization. We're not quite in the bounce, but we are in the process of stabilizing. That's really going to be the opportunity for the data to move higher. And I think it's important. We're not going to see a tremendous jump in industrial activity. Rather, a mere stabilization and tick higher in some of those measures will be positive enough.
So what is the strategy then? In that kind of environment where you are not seeing this V-shaped bounce in manufacturing or global economies, but this kind of bottoming process, how then do you kind of go into positions? How then do you get invested and where? And do you just leg in little by little, or are you trying to find defined points to get into the market?
So I think you need to get in now to that trade. So we recently upgraded a lot of the pro-cyclical sectors, industrials, materials, financials. Those are areas which are going to benefit from the bounce in industrial data. It's going to be too difficult or too late to see it when it actually happens. You need to get in as it's happening now. So the stabilization in the data provides you the entry point that you need, because when you see the data actually move, the trade will actually already be over.
All right, so if the trade is over then, where exactly are we going to see some of that kind of value creation? I mentioned this because we mentioned earlier in the show, small cap stocks have been kind of range bound for a while. They haven't been validating, I guess, the record highs that we've seen elsewhere in the markets. Transports are still trying to find their way a little bit back towards those highs. What signals are you watching for in the coming weeks and months to show that this market really does and has the legs to continue the bull run?
Yeah, so I'll give you two signals. Follow ISM manufacturing. It's the best and most timely indicator. Comes out at the beginning of the month, gives you a sense of what future expectations are for industrial activity. The second is interest rates. To the extent that we see the 10-year continue to move higher, that's going to be the sort of catalyst that also corroborates what we're seeing there.